马上不能降价了，连门口的水也舍不得给大家用了。
On May 15th, the property market in Daya Bay witnessed a significant markdown, setting a historic record with a staggering 52% reduction in price. Lower floors are currently valued around 6,800 yuan per square meter in a 26-story edifice, where the costs tend to go up to 7,000 to 7,200 yuan per square meter for higher floors. This dramatic reduction underscores the troubling trajectory of the property market in Huizhou, Guangdong, where properties are seeing a precipitous fall in prices, reaching a rare 52% discount, a testament to a veritable market collapse. Alarming signals emanate from this downturn as the wealthy elites who once held numerous properties have now entirely liquidated their assets, leaving the market in the hands of ordinary investors. Concurrently, the volume of second-hand homes traded in first-tier cities is dwindling, a trend that could jeopardize China's banking sector and local governance. A notable property adhering to the 72% discount is located in Daya Bay on the eastern flank of Shenzhen, an area renowned for its stunning seascapes. This property is named Jingun Residence. According to data from Huizhou's local media, the average record price for Jingun Residence was 14,741 yuan per square meter. During the property boom, this seaside haven attracted numerous investors from Hong Kong, with prices reaching a remarkable 30,000 yuan per square meter. However, the cost has now descended to a mere 7,200 yuan per square meter on average. Lesser desired floors such as second and third offer an even lower entry point, requiring just 6,000 yuan per square meter. The architectural layout of this property incorporates a generous 98 square meter living room and 3 bedrooms, one of which includes an ensuite bathroom. These elegantly furnished properties are available for a modest 6,000 yuan per square meter, a price that dips even below the aforementioned 52% discount. Daya Bay, a picturesque coastal region blessed with a year-round spring-like climate, is nestled just beside Shenzhen, the pulsing heart of China's economy. A mere 20 kilometers from Shenzhen's Pingshan district, a swift 1-hour drive on the expressway brings one into the vibrant center of Shenzhen. Yet even in such an ideally situated location, property prices are witnessing a startling collapse. This begs the question, if such a prime spot is not immune to the property market downturn, where in China is? The plummeting property prices in Huizhou have led to an intriguing situation. Upon consultation with the Housing Management Division of Huizhou Housing and Urban Rural Development Bureau, reporters discovered that while officials acknowledge the property developers' price slashing, they consider it a normal market behavior. As long as the firms are following their procedures and there are no other issues, they're at liberty to sell online legally and rightfully. But have you noticed the underlying problem? Property developers are cutting prices by as much as 52%, and the government is standing aloof. In the past, when property developers cut prices, there were instances of homeowners causing disturbances at sale offices, compelling developers to hike the prices back up. Now, however, when developers publicly lower prices, the government declares this to be the market's prerogative, free from intervention. What implications does this carry? Commentators familiar with the workings of the Chinese government point out that this could mean that previous price cuts affected the interests of certain individuals within the government. When that happened, the government would intervene and developers could not drop their prices. The current price reductions may have become unrelated to those individuals within the government, hence being regarded as market behavior. Such is the underlying logic. Specifically, it is possible that the stagnation of many property prices in the past was intended to give the property owners elite time to sell their properties. Thus, price reductions were not allowed. Once these officials and elites have nearly all departed, the prices could be dropped. There were cases in the past when protesters had the audacity to vandalize sales offices. This was mainly due to the support they received from the government. boosting their confidence. How dare ordinary people with no connections go about damaging cell offices without getting arrested? Many government officials own multiple properties. Provincial governors, mayors, district heads, they are all substantial property owners. Perhaps the properties aren't registered under their names, but they are related. Therefore, property prices couldn't drop, and the government needed to step in to stabilize the market. After the elites depart, a market crash is considered normal market behavior, requiring no regulation. If the common populace protests too violently, they risk being detained, fined, and penalized thousands of yuan. These fines, in the face of a strained fiscal income, are used to sustain local government operations. This, dear listeners, is the harsh reality of China. Daya Bay, merely the southern coastal region of Huizhou, has not escaped the citywide property slump.
巅峰的时候啊，惠州的均价跑到15000，现在只有11000了。想当初啊，海边的房子都要15600，而现在呢，5-6千还不好卖。还有现在惠阳的秋长啊、德威、中州、金辉、荣创啊、正业城这些之前都是13000起步，现在干到了7000多、8000多。惠阳老城区的博悦府啊，之前一直很硬气，坚持不降价，都是14500的价格，现在还是扛不住了，直接骨折8000多。
At the peak of housing prices, the average price in Huizhou reached 15,000 yuan per square meter. The current average price is only 11,000 yuan. Most of the properties that started at 13,000 yuan have now dropped to 7,000 to 8,000 yuan. Local luxury houses have also been heavily discounted, including appliances. Well-located, decorated houses only cost 8,800 yuan per square meter. Many second-hand houses basically lost 300,000 or 400,000 before they could be sold. And unbelievably, they still can't be sold.
惠州的开发商现在彻底杀疯了，大降价、大甩卖，为了保命不择手段啊！这边房子现房啊，惠阳中心区原来卖15000的，现在直接卖到8600一平啊，而且还是零首付购房啊，只需要交2万块钱定金就可以了，并且这里还送一个永久免费的车位使用权啊。
Now developers are vigorously promoting their properties, not only lowering prices but also offering car spaces and giving 30 years of property management fees. But there are not many buyers. According to official data, in April, there were 56 residential projects in Huizhou with continuous supply, and the supply side had a large amount of real estate, a monthly increase of 62.5% in supply volume. But the transaction volume fell by 36% compared to the previous month. Experts believe that if Huizhou housing prices continue to fall, it may next affect Dongguan or Foshan, which are closer to Guangdong. Then this effect may further extend to the core area of Guangzhou city. Currently, the downward trend of the real estate market in China is quite evident, including first-tier cities such as Beijing, Shanghai, Guangzhou, and Shenzhen, as well as strong second-tier cities such as Hangzhou, Nanjing, Wuhan, Suzhou, Xiamen, Chongqing, Chengdu, and Ningbo. Their second-hand housing transaction volumes are all decreasing significantly. For example, according to data in April, the transaction volume in Beijing fell by 40.5% compared to the previous month. Shanghai's transaction volume fell by 26%, Guangzhou's transaction volume fell by 14.36%, and Shenzhen fell by 24%. These significant decreases in transaction volumes may be due to some investors being forced to sell their properties, fleeing the market's downward trend, or people choosing to sell their houses and leave China. After these people finalize their transactions, there could be a further decline in trading volume, possibly leading to a situation where value exists, but no active marketplace. However, developers are unwilling to be in such a deadlock. They need to lower prices to sell properties and recover funds to repay debts. This may trigger a cycle of price cuts, eventually forming a downward trend in cities across the country. This is a big headache for the Chinese government because it puts a lot of pressure on local debt and China's banking system. We have just talked about the housing market. Let's take a look at the current commercial real estate market, where a famous enterprise is also facing financial difficulties and may default in the future.